think, preparing. So now I need to go back to YouTube and share a screen. Desktop number 2.
El método por 4 está diseñado para personas ocupadas como tú. Dedicando solo 15 minutos al día, puedes gestionar tus inversiones.
Right. So, let's get the live stream connected up, I guess. End live stream. Oh, the live stream's actually going now. So, happy days, I guess. Right, guys. Let's get going. Can anyone on YouTube see me? Let's just get this onto a different screen. Excellent connection, it says. So there we go. I'm just been downloading a new video on fractal trading. So can any of you guys see me? Support resistance. Someone's called support and resistance loud and clear. That's interesting, Handel. Thank you. Support and resistance. Great stuff. Great. Thanks, guys. Right, let's get moved on. A quick review, really, from this morning, really. We did our gap trade, which was very nice. The bots, the fractal bots, have been working okay, not fantastic. They've been nibbling money out of the market. And as we were talking about, this morning, well, Bridget was talking about this morning, and me, about how tetchy gold seems to be. But this is a trade we set this morning, and we're just over 0.5% up. So that's gold. And let's go and have a look at crude. That was a trade we had on this morning, and we were looking to punch below the 200 EMA and get a little bit better than a 1-to-1. Now, if you remember rightly, we do need to break out of these levels up here, and all we're doing is playing the range until we get right. Okay, so this was the trade. I wondered what time frame I'd painted it on. So this was the entry. This was a 1-to-1, and I think the target was a little bit lower than this. I moved my stop to entry here, so it was no loss, no gain. But if you'd done a 1-to-1 in the room, then well done. That was a nice trade this morning. What I'd like to be able to see today is for crude to get itself up into the 71.50 areas, and then we can short it. The reason I want it up in the 71.50 areas, because we need to pull the FTSE up. We shorted the FTSE this morning, and we've left the FTSE alone because we're shorting crude. Right, so a bit of a reminder on what we were doing this morning. So let's zoom into the details. So we were looking at closing the gap, and we were looking, and we took a fractal trade, reversal fractal down here into the close. So there's the closing cash pivots. The market come down, smack, made our money. And what I'd said to people is to put the crude and the FTSE alongside each other. The crude will be the leading indicator for the FTSE. About 26% of the market cap in the FTSE is all on oil. So if crude's going to come down, the FTSE will pull down as well. And the initial target I wanted was the 61.8 Fibo expansion, which hit within the first hour. And then my second target that I'd said to people to aim for is the 4-hour 61.8%. And as you can see, the market blew through that as well. And I personally, in the room, I took the money out of here and made our 1%. Well done to everyone who took the second and the third. I did not. I traded crude instead. And yeah, it's come right down to the wall trade on S3, which is not necessarily a wall trade because we are trading with the trend. And the trend at the moment on the FTSE, as you know, is down. So what we actually want is for crude to pull the FTSE back up. That's what we're looking for. Watching crude pull the FTSE up if we can, and then we'll give it a tap down into the close, back down into S3. But to be fair, I really don't think that's that's very likely. We need to go and have a little look at gold before we go on to the Dow and the Russell and the S&P and the NAS, because we are heading up to a stop to entry function here. So we're heading up towards a 1%. And I must admit, I've just banked on my other accounts 2,700, and now I'm watching the market run even higher because I can't manage. Hi Pep, I can't manage 3 accounts at once and still talk coherently. So never mind. So what we're going to do on here, we've got what you can do before the market opens, should you wish to. And I'm not sure whether I want to. Shall we bank another 1%? So are you still in it? I know Andy and Bridget were still in it. Are you guys still in it? In gold?
No, not me. I'm out now, Steve.
No.
Oh, yeah, right. Do you know what? I think I'm going to, at 11.5, I think I'm going to take the limit rather than going for the skies. I think I would like, if I can see 11.5, and we have, before the American market opens, then I think we'll go for it. And what I'm going to do also from a risk management point of view, I'm going to move my stop under the flat bottom 15-minute bar there. So if we get stopped out, then we're looking at a 0.2%, just over 0.2%. We should get a retest of the Fibbo target we had yesterday, which smashed the target, which was nice. So we're looking for a double tap, but we never know what orders are sat in the market waiting to go. At the moment, we don't know whether that's going to happen. I'd like to see the market pull back after the open, and then we probably can get into some 5-minute fracking, and we'll see how we go with that. So just looking for a 1-to-1 on gold. The Dow, right. So we're looking for the closing gap on the Dow. You can see the Dow absolutely hair-tailed it up. We were talking about this morning. So the Dow, you can see here we've got a closing gap. This is the closing gap here. The closing gap has won 4 out of 4 this week, and Friday is the worst day for closing the gap on the upside. Quite interestingly, but on the downside, there's a 79% chance this gap will close on the downside. And that's what we're going for. So I'll just have a look. Where's my indicators that are the ATR? ATR today, the least distance we would really require to be away from the Dow is 84 pips. So we're looking at, where are we looking at here? Well, it's right on the cusp, isn't it? So it's not, and we're going against the trend. So we're going, the trend, of course, is your friend, but it is a gap trade. But we have from 1 day all the way to 15 minutes down to 5 minutes. So on every reasonable time frame, the trend obviously is your friend, but we do have a market inefficiency. We've got a server close that we should get return to sender in cash hours at 43757. and we've got the daily pivot and the close very close together. I'm thinking that we will do a fractal reversal here. So we're underneath the 200 EMA, a fractal reversal. We can put in 44 pips with a, if we're right, we shouldn't get a double tap reversal on there. So we can do 35 and 44. So set you 1% risk at 35 pips on a stop, 44 for the target, 0.5%, just 0.5% risk. And we want to be looking, when we're getting ready to do this, that would be a good enough trade. We would be looking for 35 pips with a 44 target, which would, excuse me, give us 44 divided 1.25%, which would be quite nice if we can get that straight out the trap. And do you know what? I think I'm minded just to put that in at that level at the moment. I'm just going to put it in at that level at the moment. So we're in on the Dow at 43,775, 35 pip stop, which is very low. The ATR on the Dow is average true range is 85, which is pretty big, but coming down from yesterday after the monster moves. Monster moves yesterday, 660 pips. The 5-day ATR moved to 660. Today it's 564. So what we're looking for here is the market just to come down, kiss the close, and then more than likely take off. We're only interested in the gap trade on the Dow today because we're going to have a look at some other markets as well. If oil goes up, we're going to give oil a tickle. We want to give gold a tickle. Robots are still on. Gold robots are still on. And I'm going to put an alert on camera breakout long. If we break C-ball, then we may want to revise the entry. But we're 15 minutes away from the market open at the moment. So we'll wait and see. I'll just save that view. Let's go and have a look at the S&P. So let's wind out a little bit. All the writing from this morning is still on the charts. So I will be writing a robot of the weekend, like I said, to test the manual trading. Get rid of all this. To test the manual trading and what happened. How to trade the S&P on a swing basis. Absolutely monster trades this year on the S&P, and even better on the NASDAQ if we had done it, but we didn't. Got me call option still for the 17th of January at 36, and the over 300% up on the moment. You can see my initial targets here for November, 60.10, and if we can then get a wiggle on 62 or 2. 62 or 2, I should say. Yeah, 62 or 2. So that's what we're hoping to get. Let's just turn the cash pivots off a minute. Very, very strong bars. I bet you that's punching the volley. It is, yeah. So the gap open, the break on the 9 EMA on the volley here, that was going to always send that to the top side, but that's just a technical view. It was fundamental in why it happened because Trump got in, didn't he, of course. So market is screaming long. It would be really, really nice to get a retrace. The chances of that happening today You can't stop a freight trend. Everyone's really, really bullish on this. If we could get a retrace, then that would be fantastic. Even a 38% retrace would be very interesting to trade because everyone is very bullish. 38.2, put that in. Everyone's very bullish on the markets. But let's turn the cash pivots back on again. To get that pullback, we're going to have to break S3, and that's probability probably lower than a snake's belly. But you never know. You never know what traders are going to do. So we broke out of our, I guess, rising wedge here. The market blew out the channel to the top side, and the market just took off. I'll get rid of these drawings as well. We don't need all of those. So we've got no closing gap to trade on the S&P because we are right on the gap. Futures market did pull down for a 15-minute bar reversal on the futures market. Didn't take that. Just making those observations, and it wouldn't have worked. It would be nearly there, but I'm going to put an alert above this on this fracker here to see if we can get a 5-minute bar break to the top side, or even better, a small punch up above this fracker here, 15-minute fracker, with a little pullback and a 5-minute fractal break, and then we'll head for the daily highs there today. That would be an interesting trade to do. The market does need to come back, but if the market's not going to come back, then, as I say, there's nothing you can do about that. Like I mentioned this morning, when you think the market's hit the top and everyone tries to short it, it is so difficult to stop a super tanker in trading. Once the market is bullish and gone for a big bull run, you often find it carries on going or overshoots. So when you think it's all over, it isn't. It's only over until we start getting a structural breakdown on the time frame we're trading. So on here, our structure that I'd want to have a look at, because futures market's already pushed down, would be a breakdown here, looking for camera the breakout short. But also, if we do hit CBOS would be a screaming buy and a bounce off camera the breakout short today. That would be something to look out for. So as a recap, crude, we're waiting for crude to come up. And crude is, well, all the on the live room this morning, we were talking about the indecisiveness on crude and about drill, baby, drill with Trump. And, there's a potential glut of oil with China not taking it up with its manufacturing powerhouse. So we might end up with a glut of oil and oil coming down even further. We are trading above the 200 EMA on the 4 hour, and we've got a little collection around here of the 1 hour and 4 hour resistance levels here, really. So it'd be nice to come down and if we can put that into check again today after the market rallies up. It's not really looking likely, but you never know. You never know what's going to happen when the sessions open. NAS, have a quick look at that before we go get ready for the open. Right, NAS. So actually, I've left this on because that was quite interesting. We did this earlier in the week of what could happen to the NASDAQ on an overshoot. And there was the target, the 21,134. I put in 21,132. And it's interesting that the markets hit these fibos repeatedly. Really good. because really we're not really trading price as such. We trade in people's emotions and where they think the market's going to go, and the market is a result of people's behavior. And people would argue, well, it's the robots, the algos that do it, but who does the algos? It's humans. And so we're trading human behavior. As a result, there's price moves, and we're looking at that. So we can't try to stop a juggernaut. It's, as I said, hugely difficult. We've broken out that double top that we were talking about before. 7th of November, we have a closing gap. From the 7th of November, the market just took off and never closed the gap. And well, we've got we'll do a little figure on that. I don't expect this to come down on the 61.8 figure. Maybe if it can come down to the 38, but I'm not holding my breath on any of these Fibonacci targets, retraces being hit. We'll see, but we're going to stick them in anyway and see where we go to. We do have on the 4-hour bit of soft resistance here from the previous impulsive rejection here, just below the 38% figure. I'll take a good target for today. Well, we don't know what the target for today would be. Let's go into here. Have we got a closing gap worth going for? Closing gap today. Well, we don't really do a closing gap on the NAS that often. 50 pips. How far away from the close? Nowhere near. So a breakout of here will really get the market salivating and heading up towards Camarilla breakout long. But will people hold into the weekend? Don't know. We know Putin is looking for a peace deal. We know Trump has put a warning shot across Iran's bows. We know there's certainly quite a bit of unrest. If people have got such a lot of profit in their pocket, are they going to hold on to it? We don't know. Just doing a 1-hour fibber, let's make some assumptions because we have to when we're doing these extensions. We're going to do a fibber from the last bottom here to here. We're going to have a little look at where the 61, but right, okay, very interesting indeed. That's right on Camarilla breakout long. So we can see there's going to be a potential target here as a Fibonacci as well. So we'll set our target in a front run of, it's 21.31. I think we'll set ourselves on that fibber, bang on that fibber for an initial target. And the next target's going to be about 3.3. Front run it. We want to don't be a P for a tick. Can't say it because we're on YouTube. But front run where you can, or the fibbers. Everyone else be pushing for the fibbers, and we don't want to do that. We do want to trade this today. I'm going to have a look at the Russell as well. Got 4 minutes to go before the market opens. We've got some alerts going on here. So we have got Germany. We've got the DAX triggering off. Gold. Get rid of Greg's. We need Wall Street's going to the top side. So let's save this. We're going to put some alerts for the market taking off on the above the close on the Nasdaq to see if we can join the party. If the market comes down below the lows, then on the futures market, we'll look to join the party again. Let's have a very fast look at gold, and then we'll open up onto the Dow. Well, yeah, people are closing the positions out and putting cash in their pockets before the market opens. So it'll be very interesting to see what happens. I'm just looking at the other screens and what's happening with the other markets. Right, let's Dow. Wow, need to reevaluate this. So we can do a reversal from here. Let's just have a little look at what we can do now. We've got a few minutes. A second fractal reversal here. I'd want to stop above C-ball or above here, 44 and 58, guys. New areas, redo the calculations, 44 and 58. 44 stop, 58 pip target. We'll manage this dynamically, and we'll see where we go from there. This market could really dive down very fast, or because it's above Camarella breakout long, it just could go to the top side and leave a gap. If the market initial impulse wave does go to the top side, then we'll cancel this trade, but keep in your risk management on a 44 pip stop. And we'll see where we go from this. Well, the market's going to be open in a few seconds. We are trading against the trend, and I don't like to trade the first fractal reversal kind of here. So let's see what we get. 30 seconds to go and see what's in the market for us. Let's see if this market is going to dive down. I'll give it a 1.3% trade. Should we get 5 out of 5, that would be quite interesting. But we need to be careful. Not markets have an impulsive wave move up, so we'll let it do what it wants. Look at that move. All the orders, buy, baby, buy. We're above Camarella breakout long, so that is an impulsive wave up. Orders, as I said to you, when you think you're in all-time highs, the juggernaut just keeps going. So be ready to go in at 0.5% again. If the market is flushing people out, then it'll return to sender quite quickly. So we have to be able to respond quite quickly also. And gold is responding, coming down. Right, let's wait and see what is going to happen. Looks like we might be getting that reversal. If it breaks down below C-ball, we're going to get ready for the trade to follow through. Just get it ready to go. But as you can see, the unbalanced volume is absolutely ratcheting up. I don't know why I've got 2 ATRs in there. And the participants in the market are really coming in. You can see the average true range is rattling up. Lots of buys and sells going on. I think we can just leave this for the moment. We'll put that in here as a sell order. We'll keep an eye on it. But really high test here. It may well be pushing all the retail traders, I guess we are, out of the market. People trying to go along. It's got to be patient. Let the trade come to us. I've just done a fractal video. I've just uploaded it, but I've not typed in all the detail yet. So it's about an 8-minute video. Tells you how to get into a fractal and how to get out of a fractal by using it as a stop. How to use a fractal as a trailing stop to maximize profits to get better than a one-to-one. So I'll get that published after this live session, and then you can see. I'll put it in I think the traders on Zoom, you'll know all about this anyway. But I'll put it in the learning center anyway under fractals as a video to watch. But it's something we do every day. It was some of the guys on YouTube who are really interested. They've got the fractals. And they've got the loaded gun, but don't know how to press the trigger, which is fair dues, really. And there is a document that tells you how to do it, but it's always best to have a video available to watch as well. So this looks like a real high test and a reversal here, but we need that. We are now coming under Camarella breakout line, and we do need that. Come on. Let's see you come down. Let's see if we can get this closing gap done. We're only 4 minutes into the a live American session. Let's see if we can get 5 out of 5. But it must have made, the Americans do like buying American stocks, which is great. It'd be good if the UK had the same allegiance to their stock exchange, wouldn't it? So we're putting a 5-minute Heikin Ashi bar now. And be a lot of people sat in string vests now and just had the shirt ripped off the back trying to go along. But to let the trades come to you. We can see on balance, the volume is down on balance, right at the micro level in 3 minutes. And participants, people are cashing out. Let's see if this impulsive move can get some acceleration, knock us in, and then carry straight through to the daily pivot and the close. It looks like a robot's kicked in on gold as well. I'm just looking at another screen. Robots have kicked in, trying to buy gold again. So we'll see what happens there. Just stay on the down, just to see where we are. It'd be nice to do this. Pain in the butt, really. We're in a trading room. It does it really quickly. As soon as you stream on YouTube, it gets camera shy, doesn't it? And it doesn't want to come down. Yesterday, it came down with a vengeance. It's absolutely shot down on a spike. It's like a few seconds. So we're clicked in now on the down. We've got a stop above Camarella breakout long. We've had a high test reversal. On balance, the market is down. You can see this is the OBV9 indicator. That, of course, that we use for the people in the room, I'm explaining this because the people on YouTube won't have a flipping clue what this is. This is the OBV9 that you can get your hands on. I'll put a link in the video afterwards if you want to get hold of it. It's on the website, and it gives you a really good heads up of what's happening in the market, about to happen in the market before it does. It's a forward-looking indicator and very quickly tells you where the on balance, where the volume's going. We're still not getting, we're getting a little bit of a pickup of participation. In other words, the average true range, in other words, the average true range of the market moving is getting higher. So that tells me there's more bears coming into the market. And from the datum point to the on-balance volume, we're getting a larger gap. So it's getting more and more aggressive, and the acceleration will be increasing. This is the server gap at 5 a.m. Nearly in every case, that's hit. What we're going to do when the market gets to, if it does get to it, round about, we need to, once the market gets to round about these levels, breaking this gap here, the fractal gap here and the server, once it gets round here, then we should be thinking of a stop to entry. And we'll do that now in a stop to entry, guys. So we've got no loss, no gain. We cannot lose on this market. And now we're waiting for this to come down to its final conclusion. If you're wanting to trade on a 1-to-1 or 1%, then I think it's already hit 44. Have you pulled the trigger here, Andy? You're not answering. All right.
No, mate. I'm still in.
Well done.
I'm holding it.
What about Mrs. B?
Well, I have to tell you, I wasn't convinced, so didn't do the trade.
You're not convinced? We won 4 out of 4. You're not convinced?
No, I know, but rather than take up your airspace, it wasn't that. It's because I am using up some of my leverage elsewhere, and that would have meant that this could have taken me, if I'd got into difficulty, it could have caused me a problem.
Okay, well, that's fair enough. It's all about risk management, isn't it?
Yeah. And I thought, no, I'd rather miss a trade than start thinking, oh, heck, now I'm going to have to start, pulling stuff apart. So I stepped out.
Yeah, that's the right thing to do. This can easily, because this average true range is going to be what, 60 odd pips. We're very, very tight. This can easily not work easily. And we might get stopped out for no loss or no gain here, but it could easily not work. There we are, I've been stopped out for no loss and no gain. We really want to be a lot further away from the gap. This will, I'm convinced that this will close. We've got about 79% chance of this gap closing. The issue that I've got is we've got the server here, the bounce off the server. We've got the bottoms of all the futures market here, where the market has resisted around the server time, all the way around here. And we're getting buyers into the market. Now, if you can see here, less and less people are trading, taking profits into here. If we get into the 1 minute detail, you can see there where the buyers have come straight in on here and come in. Now, one thing I'm not opposed to, because it's made a dive for the close, we need to be at least 5 pips within the close to consider it's closed, and we're not. We're close, but we're not. So there is a hole in the market here, but there again, there was a hole in the market yesterday as well. And it's not opposed to leaving holes in the market when we're in a big bull run. It's a shame that I want to get a little bit more than we did, than we never did. It did hit 1%, 1-to-1, but that wasn't good enough. I wanted more. And please, sir, I want more. You can see what that does sometimes when we get a bit feisty with the trades. So where were we? Once we're breaking here, weren't we? And 44 pips. We could have had that, but coulda, shoulda, woulda, didn't happen. It will happen today, I believe. We've dived down into the futures market. On a Friday, we have a 79% chance of the gap being closed within 4 hours of the open. So we could hang around a little bit and see if we can get a fracker entry to give that close a little bit of a tap. We had a first attempt, lost no money. We'd still be in the market as well if we'd kept our stop in, but we like to frack this in. And at the moment, I've got a 1 minute fractal here. So what the ideal position would be the market to come down, put in a reversal round about here, up here, give us a fractal stop here and a break under here for a nice stop here, and then finish it off and try and get 1% out of it. But that's the wish. Whether the market's going to do that, no idea. We've had no alerts go off, so we don't know whether the gold stop has triggered. So we made 2.7 pips on gold rather than what we're going for. So 0.23% on gold. That's hit our dynamic stops that we're tracking. What we want to do now is put some alerts in here, I think, and let's just go and have a look at the rest of the market, see what happened. So I'm just going to put an alert here, an alert up towards C-ball again, because we could get a second dive. We've not, on balance, we've not got any really big volume coming into the top side, not just yet. So if this can get itself above Camarilla breakout long and then put in a full candle body and wick above Camarilla breakout long and away, then we'll probably be away, and then we probably can forget about this during our live session. It's all about keeping money in your pocket. But yeah, that's trading for you. That's the way it works. We'll just move this up into these nice 1 minute bottom fractals, candles, I should say. Zoom out a little bit, put it in perspective. You can see the really high push up, and then people would have followed that and they'd have lost the shirt, and then market coming back down here again. Didn't quite, well, it didn't meet the 1% criteria, but we were going for more. We didn't get it, and we lost no money. But let's see. I'm really keen to get that gap today at some point, maybe later tonight. We'll have a crack at that final solution. Should we get a nice fractal break under Camarilla breakout long? But, we've not got that. We've got gold coming down to 68.88 area again, which could give us an opportunity. You can see on balance volume starting to rise. I'm not going to be persuaded to go in. Not on the down. So let's go and have a look at the NASDAQ. I'll just go and look at those. You won't be able to hear those alerts because I've got that. So we've got the US500 going up. Yeah, we know that. Right. Oh, yeah. Okay. So the market has bounced off the pivot by the look of it, and then raced up, and the perfect storm, of course, is when you are going for a gap. is to go with the trend. We tried a reversal against the trend on the Dow, and that didn't work, not yet. This was a blast straight into the close. So there's a closing gap. Now the market's hesitating. That gap or that market inefficiency has now been closed. The market's coming off. Let's have a look at that Dow again. It's making those screaming noises. I'll just show you what happened yesterday with the gap. Let's go back. The market was a spike down into the market. Let's have a look. There we are. There was a spike. The market come rattling down, hit the gap, and then just proceeded to swan off in the opposite direction. That was a nice trade that yesterday, and very quick. We can go there. It happened within 1 minute. And get some more data up and show you. So there we have Friday, Thursday. Let's there we are. That bar there come rattle. So the market actually took 2 minutes to close the gap. And then today we got 1% toward it on the risk reward ratio. And now the market has just bought the server, the 5 o'clock server time. And we didn't get the pivot. Market hasn't bounced off the pivot, hasn't bounced off the close. What it did attract is all the buyers on the futures market against the pivot here. You can, not the pivot, the server. So people bought this level, and now it's on its way. I think what we'll do, we'll put the light above C-ball, and if it does start to reverse off this 4-hour area here, so the mustard is 4-hour resistance area, punch straight through. That, you know, if it does go through there, then it's probably on its way. But we're interested in the down for its ability to close its gap. Now, why does that come on? That's the FTSE drop alarm. It's in a different time zone. I'm an hour ahead. So I'm getting ahead of myself. Right, so let's have a look at this gold. Let's see if it's going to make a bit of a pullback. Let's zoom back out on gold. So we're looking for gold to pull back and then retarget our target for yesterday, which was here, the 61.8 fib. We've put in a higher low. We can, let's just have a look. We've got a 1 hour Fibo, clean Fibo action here, really, of where the remainder of the day to bring us into. So we could quite easily foresee the Fibo boys and girls pushing this up into these levels, into that target there, and breaching yesterday's top. Stocks would need to be under this swing low. And we do need a 15-minute bar. So I'll get down into the detail again. And let's see what, so this is what we took this morning down here. And then we moved the stop up following this up and took some money out. I know Bridget and Andy and Pet probably made traded that better than me, because I only got 2.7 pips out of that. Let's see if we can get a pullback. On the 5 minute, it's looking quite interesting. What have I got there on? Flipping heck, I've got the other charts on 2 minutes. I'm getting excited for no reason here. I was thinking the market is starting to come in and buy, but we are not yet. So we're coming back in this confluence area here. People will be, other people that are pro gold will start buying, but you can see this isn't a 5 minute, this is on 10 minutes. I've set the unbalanced volume. You can see here on the 10 minutes, and we've got the volume, the average true range is coming down, participants coming away. In other words, those are the bears coming out of the bearish trade, coming down. So, and you can, so what we want is this unbalanced volume, as you can see here, picking up like it did this morning, taking the trade and the market moved away. We're looking for that to happen again, and we want a 15-minute bar. But these are all the preemptive strikes, of, you know, people taking profits into here and people buying. We had a good old discussion this morning on gold, on whether gold was going to go up or whether it's going to go down. And it's in the hands of the trading gods at the moment. What we do want to see, though, is this series of higher lows kept intact, because we've now got this series of higher highs. So we are bullish. The market is still bullish. If you were to take a support and resistance trading, I'm back into this resistance here, then you will need a stop of 13 pips and a double tap on the, well, yeah, there is a one-to-one opportunity there. The issue we've got in the higher time frame is we do not know that the market is exhausted yet. And according to the unbalanced volume on a 10-minute time frame, it's not. So really, we don't want to be putting a suck it and see trade. I suppose if you had 1% and you wanted to use 1%, you could divide it up into 2 trades or 3 trades and fade in with a stop here on the basis that you're looking for a reversal around about 26.88 level, 26.87. But I prefer to be a bit more precise and suck it and see. Put some alerts on a 10-minute chart. So we've got 2 candles again with the flat tops on here. Which is looking like a potential reversal above this top, this Heikin Ashi here. This setup is called a 2-ring low. In other words, you've got a higher, a lower high and a higher low with 2 momentum candles very close together. The trade is a break of that bar there, going long. We don't generally do that setup in the room. The 5-minute candle has set up for the trade, but let's just put an alert on here on that ring low. Show you the 5-minute. Let's put this into 5 minutes. Let's see what the volume's doing down in 5 minutes. So you can see from this morning here, the market it's been green all the way up there. And what we're looking for is the unbalanced volume. Got little participants, markets coming down. What we really want to see is some green on the OBV9 and a little tick up on the average true range. There's a Euro USD bot ready to run, but I don't want to trade that just at the moment. Where is the euro in relation to Aussie? Aussie's on the floor. 1.4, euros 3.1. Hence the market running, but it must be running against the trend. It's saying get ready to put a bottom, but I wouldn't stand in front of the euro at the moment. Right. Let's get into that. So we're seeing here a little tick up here, but the volume started to come through. But on balance, it's not better. It's not good, and that's manifesting itself in the candle here. You can see the shape of the candle. The market tried to come up. We've got this long rejection wick, very, very small body, absolute rubbish candle, trading under the 9 EMA. It's nothing you want to get involved in. You can't do a preemptive strikes. You got to wait for the market to tell you it's ready. And only then when it's ready do we trade it. And it can be a pain in the backside waiting for the trade. But isn't it better waiting for an hour or two and making 1% bank or more than snapping everything that you can see and potentially walking away losing money? We don't want to do that. So really nothing to see on gold. We've got an alert if gold starts moving up, and let's have an alert if gold starts moving down. Just save that view on a 5-minute, get a little view on what's going on. Let's have a look at this NASDAQ again. Well, after yesterday, the massive moves, the market's really quiet in comparison today. Let's just quick reminder on the economic calendar when it actually loads. All the news that's going to affect anything's out. Michigan Consumer Price Index, positive, expecting 71, got 73. Inflation running slightly high. So really the Michigan consumer, it's gauging sentiment amongst consumers on personal finance, really. Judging consumer spending, and people are saying, yeah, not going to really impact that much. We've had such a big run up on tech, massive double-digit runs. The market's going to struggle going up, but if it does break out, then I wouldn't get in its way. Disappointing, really. We're expecting a bit of sparks this afternoon to have a crack at. But if it's not there, it can't force the trade. Let's look at this S&P. Well, S&P is a different matter, isn't it? Let's have a look. Why didn't my alerts go off? Because I wanted to break of the high, didn't I? So we could trade into Camarilla breakout long. Right. We missed that one completely. Bit of a shame. Yeah. Fibble boys have been trading this one. Wanted to break of that high on a 5-minute fractal. There's a fractal. But you wouldn't have traded that on the right into the daily high. If the fractal was above the daily high, then we would have traded that anyway. So you can always make a trade fit. You can always back fit a trade. So we do like hindsight trading. After all, we are on YouTube. We should hindsight trade and win everything, shouldn't we? But there actually was a fractal above. I'll shut up. There actually was a fractal above the daily high. Oh well, que sera, sera. Never mind, we've missed that. But you know, so for instance, if you were going to trade this as an illustration, and could we trade another 5-minute fracker into C-bond? Let's just have a quick look of what that breakout might be. That's 3 pip. No, we haven't got the risk reward structure for that. So if you are trading this fractal, if we were going to trade that fractal, we'd want to trade that breakout, and our stop would have been under here. And our stop is under the reversal of the fractal, and that until we get a bar like so, which then causes a higher reversal fractal. So now our stop would have to be risked at 1% to go from here to here. Now, the way you would get into the fractal is you'd look at the top of the fractal, which in this case was at 5985.8, and then you would add the spread on top of that break, put the buy in at that level there, come to the bottom of the fractal, add the spread in the bottom, which is what, 0.7 at the moment, 0.5, so that go to 2, and then add 1 for 1, add 1 pip to stop a double tap reversal and keep you safe and sweet. You take the fractal break here, and you would have been in here. This is hindsight trading, I know. So would we have took it? If we were there, if we were watching this come along, we know camera the breakout along is here. We know there's open space between here and here potentially. However, we do know there's a Fibbo 161 before that. And we're watching this structure here. Would you want to take that? Well, possibly, because we've got a bottom leg up here. Would I have took that today? In all realism, I would not have took it, and I would have missed out, because I would want to have taken a 5-minute fractal for the simple reason the movement is so small, and the movement that was required there, the stop was only about 3.5 pips. And you've got to have a look at the average true range. Average true range, I'm just looking, it was 11 pips. So that impulsive move, the 15% average true range was, an impulsive move was roundabout, give or take, 11 pips. So having a 3.5 pip stop is, you really are hoping that momentum pushes your way, because if the first impulsive move does not work, the chances are you'll probably get stopped out on 3 pips here. So if that impulsive move does not work, you'd probably get stopped out. And there you go. There was the stop out. Do you want to take that gamble? It is a fractal. They are very good. I wouldn't have took that gamble. The gamble would have worked. That is only that was the 161 fibble. Knowing there's a fibble there for people to reverse on would also give you another reason not to trade it. Even though it worked, it's too much of a gamble on the risk management side because of the average true range is so high. Having a stop down here is just crazy. You would have been knocked out if that had not worked, but it did work. But if it had not worked, you've got to bear in mind when you're trading, you want to make sure that you've got a good risk reward and it's in line with the volatility of the instrument that you're trying to trade. We've seen all these pulling back a little bit. So what's our down doing? Well, is it going to come back? We haven't everyone, we've got the on-balance volume coming down. We've got people walking away. We're sat here now an hour in and we're still waiting for a trade. Gold has put a double tap reversal on the 5 minute. We have put in a new all-time record high. This is, like I said before this morning, do not get in front of the market being really bullish, because when you think it's hit the top, it will push a little bit more. And yeah, be nice if we can get this gap nipped in the bud. If we can get some structure under C-ball, but it's only 0.5% trade because it's going against the trend, and we don't really like trading against the trend, only when there's a bit of a market inefficiency, and we have got a market inefficiency and a little hole but we will need the market to be trading under Camarilla breakout long. Just not getting it at the moment. Let's go and have a look at that FTSE. Lower than the snake's belly. It's hit all the targets and now it's not going to run up. And that will be because oil will have come down. Oil will have rolled over and dragged this down. Actually, I should have checked that before I opened my mouth, shouldn't I? No, it has. Oil's come down and lo and behold, smacked the full target. That's the gap. That's what the area we want to get into. And oil's dragging us down. There's no way, there's no chance, hope in hell, excuse my French, that the FTSE is going to rise today now. It's getting too late in the day. Oil's on the down. Yeah, drill baby drill. Everyone's trading oil. Now, to the short side. Now, oil's at quite an interesting level. It's had a number of rejection areas in here, although and it's below the 4-hour 200 EMA. I'm not going to try and trade oil even lower. I will, however, trade oil again if we get a pullback, a reasonable pullback, and we get a 15-minute fracker, then we will trade oil again today. But for me, oil's done. We're on an exhaustive count. Again, great bit of hindsight trading here. We've broken out of oil. Oil came down, did a retest of the support that got broke, and you can see it was observed here. And then there was a 5-minute fractal that came into here, which again, we had a reversal on that fractal, but that fractal, and we didn't take it. We did not take it for the simple reason you would have still been in here trying to go, well, actually, no, if you'd done a 1-to-1 then and kept you 1-to-1, then you would have been in. I didn't make 1% on this. In the room, did anyone in the room make on oil? Did you? I put a stop to entry and got stopped. Did anyone let it run into down here?
No, not me, Steve. I didn't take the oil trade.
I did.
Oh, didn't. Right, okay. There's only a couple of you. Right, okay.
I took it.
All right, okay. Sorry, Bridget. Well done. Great. Yeah. As you know, this week, absolutely trying to mimic learn a trader on their own and see how much money that we can realistically make with a small account. And so far, we've not got this week done, but on the trading plan stats. So we started doing it for a couple of weeks. First week made 5.43. Last week made 3.55%. And this week, don't know yet. It's not finished. But yeah. Right. So there was a trade here as well. If you've done a stop to entry, there's a 1.5% there. Market pulled back up. It was never challenged, really. Comes straight down. Another fractal break here at 1.5%. Again, great hindsight trading. Right. I'm just wondering whether it is worth hanging about, waiting for markets, waiting for markets to trade. I'm going to spend my time. Question. All right. Apologize, a non-related question. I see you have Pro Real-Time Complete version 11. Can I ask how you get a previous version, as I have just installed Pro Time version 12? All right, David. Yeah, version. Now it's quite interesting. Is we've got people in our trading community using version 12 and people using version 11. I won't touch version 12 because it's still too shaky for me. It keeps losing things. Bridget coughing there. She has pulled the hair out completely with version 12. We have other people in other areas of the world that use version 12 fine. I wouldn't touch it with a barge pole personally. Version 11.1, it's took quite a few months to shake out the bugs in 11.1, and I will use 11.1. The way you use version 11.1 is when you've I'll do a startup and I'll show you. Yeah, because we're waiting for trades, I will just switch this version 11 off for you. Save everything at the moment. And now when I start my platform back up, I'll go and start version Pro Real Time up, and then a dialog box will come up like this. Pro Real Time version 12. All you do is click this tab and say, no, I don't want 12, I want 11.1, please. And then you just hit launch. And for me, this is the best trading platform. I've tried all sorts of platforms, and it's by far the best trading platform that there is. It won Charting Software of the Year 2024 and 2023, and just about nearly every year prior to that. It is a fantastic package. It is free with your broker. So long as you trade once a month, you'll be absolutely fine. If you don't, it's 13 euros a month. But if you are a trader, then it's free. TradingView is the one that a lot of people do use, but you pay through the nose on that. It's a bit clunky, but most people use TradingView because they don't know any better, really. It's okay. There is a much better platform than TradingView, which looks like TradingView, that's just come out by a company called Trade Locker, which are very good. And I've actually got Trade Locker running up here at the moment on a challenge. So I can I'll show you. I'll kind of drag it across the screen here. So here's Trade Locker, and this is looks very much like TradingView. So we've made a couple of £1,000 today on that. We're not in the market. Market's flat at the moment. But as you can see here, this is a demo account. I'm not professing this to be a full-blown. This is a challenge account that I'm running. So we've made more than two. We made from yesterday, made 3.5K. But I'm running Trade Locker, testing Trade Locker, and seeing how that works. We've got the Heikin Ashi candles up, everything looking the same. Much better than TradingView. It's Python backend, and very good. It's got all the robots and all that type of stuff as well. No active robots. I've got the markets here, trading panel, marketplace, all sorts of different bots. At the moment, they're all free to trade. But Trade Locker, pretty good. I'm writing a lot of robots for. Let's get back into the spaces for TradingView, not TradingView, for Trade Locker. You can see it's under license, charts by TradingView, so it is TradingView, but it is TradingView on steroids. It does everything that TradingView can do, and then a lot more. You can have as many charts as you want, unlimited indicators, and guess what? It's free. So Trade Locker, I'll put that back onto my other screens. Wow, oil coming off. Let's see where Greg's went this morning. Absolutely piling down. Right, it's come right down to the level we're expecting it to, and it's just hung around. So really pleased that no one took those trades I mentioned this morning. It is not good enough yet for the pasty trade. So we're at 20 past 3 in the afternoon. Is that okay, David? I don't know if David's still on. I'm just looking at a different. I've got a bunch of screens in front of me. I'm just looking at the screens. He may not. He may have left the room. Anyway, right. Another run through. Let's see what gold has done. It'd be nice to get a live trade out on gold, and a good reason why you do not trade a little hope and a wish, because the market would have destroyed you, or you'd be in a bit of a drawdown function at the moment. This will certainly, I believe, attract buyers. So we want to wait for the market to tell us it's ready. On-balance volume saying absolutely no chance whatsoever, and we need to wait and see. But there's no reason why we can't get a nice trade off on gold and make some more money on gold today. We've just got to be patient. I know we've 20 past 3. No alerts have come off yet. I'm just going to open this up on a different screen. You look at some other markets. So I don't have to keep flashing around. Yeah, we had a wee pullback on the S&P, but again, the risk reward isn't good enough with the Camera breakout long in front of us. Wall Street still going up. US tech. Right. It's putting a nice flat bottom 5-minute bar. Just a look at the Russell. Oh God, no, we won't touch the Russell. I'll show you in a minute. It's very, very spiky. So let's concentrate and pulling 1% out of gold. I'll just quickly show you what I was looking at with the Dow and then the Russell. The Dow is probably going to leave that gap. The Russell we've had that big run up, and we're looking for a retrace on the Russell to get involved. But when you get into the lower levels, look at that action. You have to put big stops on this. So don't want to get involved in that. I guess if you had a breakout of this fractal here, it would get you, so long as it can be a consistent, you put alert up here, and then if we started climbing, and what I mean by climbing is having this staircase going up and out of this triple tap reversal here on the Russell, then you could probably think about trading the Russell. The NAS on the 5 minute is looking okay. All right, David. I'm not in live trading, I'm on paper trading. I think that's the issue. Version 11 was not available. That's interesting, David, because we've got people struggling with version 12 and people who just don't find a problem. And I think some of the reports have gone back to IG, but I'm not sure they understand the problem either. And it should be okay. If you are trading David B. Oh, that's David that emailed me, isn't it? And sent me a text. So if you want to, I've got no problem whatsoever in helping you, because you've got a fractal, haven't you? We can do, I can't do it straight after this session, seeing somebody else. But if you want to have a look at it on a late Sunday afternoon, drop me a line and I'll get it set up for you on version 12. Or let's see if we can back configure version 11 for you and get that fracker working properly. That's not a problem at all. But drop me a line, drop me a note, and I'll get that. We'll get that sorted. Version 12 is well. Version 12. People don't have problems with version 12, and some do. So long as we've got a balance there, yeah, no problem. Some people are in my trading room. If I've got people that are all saying there's no problem, then we'll probably move on to it. But when I've got a balance in the room, that some like it, some don't, because it works sometimes and sometimes doesn't work. And what I mean doesn't work, for trading, it's absolutely fine. The things it has a problem with are algorithms and templates. It keeps losing things. And I don't know why, and I'm not sure the IG technical team know the answer to that either. So whilst they're the providers and can't resolve the issues, then I would stay on version 11.1, not version 12. The language in version 12 is a higher level language in version 11 and includes arrays to a bit more. You can make a few more arguments on the coding, but nothing that would want me to go to version 12 or version 11.1. And I think we had this conversation probably a year ago when we were using version 10.3 and we had a shaky version 11.1. But it's one of those things that bugs need to be fixed in the detail. Nothing wrong with any of the trading platforms. They all work really, really good. But it's all the little niceties that where the bugs are, all the little add-ons all the time. So if you want something that looks good, that works really well, it's got a great interface, and you know, trading view's not your thing, which it shouldn't be. If PRT's around, you shouldn't be using trading view, I don't think, because you've got a much better charting package on Pro Real Time. It costs you nothing, so why wouldn't you want to? But you can't. It's hard to. People break the habits. They're still like using the things, the comfort blankets. Nothing wrong with that. We even have people that still use MT4. No idea why. But you know, there are some people that like steam engines still, rather than driving cars. That would be the analogy. Right, I can feel myself getting onto my orange crate, so I'll shut up. Right. We're doing absolutely nothing in American markets yet. I think they need to be left alone for a few hours. And let's see, on the UK time, 6:30 p.m. onwards, it might be the market might liven up into the afternoon session on Americas. But this is doing nothing. So with that doing nothing and crude making big moves, let's see if we can get gold to make a run. So that is a nice bar. We're going to clear that out. And let's wait for rather get excited about the 5-minute bar. The perfect storm would be a nice candle like this, a perfect close above the 9 EMA after a nice bottom. That's a beautiful candle as well. There, flat bottom. On the Heikin Ashi, what this is showing you is the market's immediately opened and there's only been buyers, no hesitations whatsoever. Market's in, bang, and you're away. I think I use this in the video. You'll see. Don't forget, have a look at the video today on YouTube. Please comment, like, subscribe. That'd be brilliant. I'll put the video on, and it will, you know, identifies the really good candles to use in coordination with with a fractal. Yeah, that one would have worked as well when you look at it. Nice close here. So that was a 15-minute bar. The fractal is up here, and then the fractal come here, and then you got 15 minutes for the next bar to actually settle. So the fractal, you set your trade above that fractal there on the swing low under here, and that would be your one-to-one risk reward. The watch out, of course. We do this in the room all the time, in the training live room. That's your watch out. Markets potentially going to reverse into here, or as I call it, all the trigger fingers will be taking the profit early, snatching it profits. So all you would do then is, if let's say we're trading 15-minute, you then have to drop into a 5-minute time frame and watch the 9 EMA. Once you get up towards this line here, you'd rattle it across, and as soon as you get a candle close under the 9 EMA, you're out. And that's a way of extending a profit, as well as using fractal bottoms to extend profits. Or you just go for your one-to-one risk reward, so you can get out here, or you could get out on a fractal reversal here, or a bar closing the 9 EMA here. Lots of ways of getting out. Right, let's get into the 15 minutes and let's see if we are. So, you know, can we class this as a meaningful pullback? I think we should, because it is 3 candles. So we have got a lower low, but we have a series of higher lows, higher highs here, and our stop, of course, is going to have to be under here. I think I would actually put the stop under here because the markets are so fragile. They are so fragile at the moment. If you're working the way through the videos, David, then appreciate any comments on there or anything that if you are struggling on things and don't understand, send me a note. That goes for anybody really watching the YouTube videos. If you don't really understand, send me a note and I'll help you. That's why I put the videos out on YouTube, to help people. Lovely flat bottom. That could be taken the wrong way, couldn't it? A nice flat bottomed candle, and we'll do that trade, and then I think I'll throw the chips in for the day. It's no good trying to get the FTSE into the close because the FTSE's already dropped lower than a snake's belly, and crude's come all the way down. Oops, sorry, let's move it. I was just moving on to another screen, and I've moved things along wrongly. So, can I set this trade locker back up again to actually use? I've just done and moved a lot of panels. That's it, market panels back up. Right.
S&P's pushing through to C-bolt again.
Thought it would, but I missed it, which is a little bit disappointing to say the least.
A minute.
That's what happens. I'm just setting up so I don't miss it again. Gold.
Yeah.
So just setting gold up on 2 different accounts. Barely 1 minute. Ready to press the buttons. Come on, come on, come on. That's it, and ready to go on. Ready. So we've got 10 minutes to go to finish this candle off. So we'll go and have a thanks, Bridget. We'll go and have a little look. Now, if we get a breakaway on C-bolt, then we can trade this, that's for sure.
I'm hoping for, isn't it?
Yeah, absolutely, because this breaks and the Russell breaks will be trade on. Oh, I've used the wrong screen. Sorry, that's the UK version. Spanish version. Wrong. That is reload. That's just my garden in the background. Sorry about that. Right, yeah. So these are my targets. If we can get that if we can get a 5, it's already hit the targets. You can see would have worked there, but this now that this is looking tasty now. No, yeah, it's sparked my interest this now.
I need it to go through.
Yeah, so I've got people calling me. Come on, let's. I'm just going to turn some of these alerts off now because we don't need them. Let's see if we can get on there. That's the Russell. The Russell must have broken through as well. Nothing happens, and then all the buses come together. So if you break above C-bolt, one thing we've got to watch out for is a rejection of C-bolt, but we are going with the trend. So it should, if there is a rejection, it should be quite a small one. We could put a trade above C-bolt, and that would be 12.5 pips. We could say 13 pips and have a target up towards my target. 13 and 16. Look at the way these candles are breaking, maintaining themselves over 9 EMA. Beautiful. All the way from 2 o'clock. Not a hesitation at all. Renko blocks. Let's just have a look at the 4 filter on this. We'll put a 4 filter view on and just see how it looks on a 4 filter. Wow, look at all the short trades, 15 short trades ready to do. These are the algos that find the trades for us, the long trades. We're already in Bitcoin, Wall Street, dollar, Russell. Yes, it's come up anyway on the 4 filter.
Right. Good.
So we've got, yeah, 1 filter, 2 filter, 3 filter, 4. Yeah. When an MTF result comes up, a multi-time frame, it's very rare it fails. Very rare. And we had the multi-time frame in the futures market say go for it. Right, we're gonna smash the button on the US 500 above C-ball. So I know the multi-time frame says yes, but the multi-time frame doesn't take into consideration the daily pivots, and the camera the breakout long is a daily pivot. It can often get a reversal. There we go, that's the reversal. But what we can do, if this is the reversal of the pivot, we can take a break of, oh, for goodness sake. This is me with my Apple Magic mouse. It's got more magic in my fingers. And this, what's the technical term? Finger trouble. So we can take, we now know this is a frac reversal, but it's more importantly, it's a C-ball reversal. So once this breaks back through, I would think we're going to get C-ball being just smashed through. So we're going to take that 5-minute fractal and we're going to target 60.10. And I think that was 13 and 16, if I remember. Just put that in. And we can get 1.5, well, not 1.5%. What is that? 1.2%. I've calculated that wrong, haven't I? We can do, what is this level? The level is 92.5. Around 93.25 would do the job. We need 12.5. If it breaks 12.5, it's going to break down anywhere. 12.5 is your risk profile. Oh, it's much smaller than that now. Look at that fracker. So we need to recalculate again. 4, 5, 6 pips will do the job. That's below the ATR, which is 11. I don't want to take traders into an ATR gamble. I think we'll have this at, we're gonna reduce it. We'll have it at 11. 1% at 11. And put that 93.25. So this is going to be the this will be the fractal here. Now, if it breaks up first, then that's absolutely fine. Take that out there completely. I was just showing you that's a draw. The fractal will be based on if this candle puts in a higher low, then the fractal will draw under the base of that line there. If you don't like fast and furious on a 1 bar count, then you can go to the configuration of your fractal indicator. Again, you can get these on the website as well. And you can smooth that fractal indicator out to say, let's not go on the first signal, but let's go on the second signal, which would give you a fractal stop under here. But we have reversed off the cam, so we can put the trade on the cam because it will probably then break through that because it's already had its cam reversal. And we're going to put this at What have I done? It's going and deleted the target. That's the first target. I envisage the second target today. Where they're quite up high, and then I've got a 6100 call option. Oh, there it is, 6100 call option for January up there. So we have that. We have still the things, the observations, of course. Here we've broken out of a 4-hour level here. We are trading above the 9 EMA. We're above the 200 EMA from a daily perspective all the way through and down to 5 minutes. So very, very bullish. We've broken out of a bull 4-hour top. We've reversed off Camarilla breakout long, so we've had that pullback, and we're trading under the 9 EMA. So there is it's nice you can get a story behind your trade. If the story stacks up, that's all supporting the trade from a technical point of view. We know from a fundamental point of view, with Donald Trump being in, this is just going to be a juggernaut for a while. The issue we've got is at 9 o'clock tonight, are people going to cash out, or are they going to let the money stay, the profits stay in the market? That's what you need to watch out for. So I'm just going to put that trade in here now. 5993. Two five. 11 pip stock. That's 16.75 divided by 11. That's going to give you just over 1.5%, 1.52. We've got 1%. We're sat on 1.23% at the moment profit so far. If you traded like Bridget and didn't do an STE, then you would have been on 2% plus, and again took the profit at 1% on gold, which we didn't. You'd be 3% up, but I'm not. I'm on 1.2. Well, hopefully we can add another 1.5 to that, make that 2.8% today. That would be nice, and we're gonna use gold to do that. Right. What started out as a nice bar, again, got to wait for these bars. Difficult sometimes. Just got to let the trades come to you. Russia 6. Absolutely, yes. I am writing a full Python coded trade locker bots for doing fracker bots. So yeah, yeah, we're going to be running. Have I got my spreadsheet? I need to update it the past couple of days. I'll show you, Russia, where we are with some of these bots, because we're tracking them in the live bot room. We do have a bot room. You don't have to be in the market. You don't have to be in my trading room to own the bots and be part of my bot trading room for PRT. But we will be Trade Locker allowing full-time bots to be used on live accounts in January. But we can use the bots to get you through the challenges. And at the moment, can I open it? where are we? Pull the spreadsheet across. So spreadsheet. Oh, so that's not the spreadsheet. That's the that's you. Pull the spreadsheet across. So gold bots. Oh, that's not the bots. Right. Where are the bots? Open bots of fractal bot tracker. Let's get rid of that and put the right. So we have a few. Oh, these are the normal bots, if you will, and that I need to update these to finish them off. This was October, made 8%. We started tracking them live, made 15% in June, and we started tracking them live individually rather than the portfolio. So made 15% profit on the bank, on your trading bank. July was 15.4. August was 16.3. September, I had a holiday. I'm only tracking what I do, and some of the traders do better than me. I'm usually talking, so I can't put all the trades on at once. Made 9% there. In October, I've got current month October, so I do need to update this. So I need to add in the trade. Oh well, we know where the trades are. I just need to find out what happened with crude here. And that made 8%. There's gold. I wonder where gold was. So we are running fracker bots on gold. I don't use gold, don't subscribe to fire and forget robots because they don't understand elections, wars, economic calendars, blah, blah, blah. So we use bots as tools, and we throw the bots on when our tool tells us to throw the bots on. So you can see up here, there's a tool that says, get ready, put your bot on. And this one tracks. So far this month, we've done, I know I've done a lot better than 9. This is risking just 1%. Some guys risk up to 3, but just on 1%, we've made over 12% on the fracker bot since October. And I don't know if anyone's posted anything. Just have a quick look. This is the Slack room where all our traders sit. Gold. No, so these are the gold. This room's just for the people in my trading room. I haven't set up a community, but there's a community there where we've got people outside of my trading group that want to use the bots and manage the bots, and we teach people how to do the bots of monthly Q&As and the like. And this just tracks, and the community talk about how the bots are doing, yada yada yada. It's there we go. So yeah, I need to I will get all the bot data updated. It's Friday, so this weekend. So those are the bots. But answer your question, yes, I'm converting all the gold frackers into Pine, not into Pine, that's Trading View. I want to stay away from Trading View, into Python, and I'll be converting all the algo frackers that run on any market. The frackers work on any market, anywhere, anytime. They're really, really good. And well, don't publish it a lot because no one ever believes how well these things do. If I say to people we make 10% a month, everyone just laugh. But I don't mind that because we're the people earning 10% now in back pocket. But for people in my community, they know the work. They work exceptionally well. The engine's a fractal engine based on Heikin Ashi coding, and I can convert that into Python, and then we'll be using that on TradeLocker, or I will be. And I've got quite a few other robots that I will be converting and sticking into Python as well, putting it into the marketplace as well for the people to use. So, yeah. So you're not familiar with Pro Real Time. In future, I will be there when Trade Locker bot is live. Yeah, so Trade Locker bots are going to be on the live accounts in January. I'm part of the coding group on Trade Locker to do some of the coding on bots, and yeah, it's going to go live. It's on the demo accounts, for which, of course, you need a demo account to pass the challenges, and you can use the bots on the demo accounts already. So you could position yourself between now and January to try and pass a challenge onto Trade Locker, and then you can use all the little helpers, all the little algos to help you make, I don't know, 5-10% a month on your account. All depends how you trade, what you want to, and how you want to manage your time as well. It's not for everyone what we do. Day trading just is not for everybody, and most people fail not because it's hard, it's because they haven't got the resilience to keep on at it. Trading isn't particularly challenging. The thing that is challenging is the mental aspects of trading, waiting for your trade, being there at the right time, putting the time in, getting the experience. And people aren't prepared to do that. They just want to be a millionaire overnight, and that doesn't work. It just doesn't work at all. Most people fail because they haven't got the tenacity and the time available to actually learn the strategy and stay with it. But you can see, and this is a real trading room doing real trading. It's not sparks or anything. It's this is just how life is as a trader. You've got to wait for your setup. You can make a video on YouTube where it all looks really good, setup's there perfectly every single time, and it wins and blah 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 blah. And people post all those videos up. As you know, I don't. I post the real life trading up, and if we don't get a trade in the live room, then we don't. If we win, we win. If we lose, we also lose. And hopefully, those videos help people to understand why it lost, understand how things can actually go wrong, especially when they're on their own. Trading does have its ups and downs. So long as you can manage your risk, make sure when you do take your trade, it's a minimum of 1-to-1 risk reward, and that you win 51% of the time. And then you've got an ATM. Sounds very, very easy to do. Putting it into practice is a different matter. But Pro Real Time, cracking piece of software. I would say Pro Real Time is better than Trade Locker for sure. As far as the graphics are concerned, it blows Trade Locker into the ground. The thing that Trade Locker does have is the great piece of high level code, high level software to be able to actually trade in a way that you think and feel. What I mean by that is it's scripted in Pro Real Time. You can say take a break of the fractal, but if the market breaks the fractal between a bar count, in other words, that's one bar count, that's a second bar count, the actual trigger won't happen until that candle actually finishes. Whereas on a high level, more complex piece of software like Trade Locker uses, you can Python, you can make Python work how you think. So as it breaks, you can put all the conditions on for a fractal, and then you can say, do not wait for the next impulse completion of a candle, but the direct break. That's where Python will come into its own above Pro Real Time. But Trade Locker, if you're matching Trade Locker side by side with Pro Real Time, Trade Locker doesn't stand up to it at all. Pro Real Time beats it every single time as a charting package, blows it away completely. because TradeLocker is based on TradingView, and TradingView is nowhere near as good as pre-RT. And yeah, so for your viewing pleasure and use of charts, I would use Pro Realtime. For making algorithms, Pro Realtime, okay, pretty good. We've proven it works very, very well. It's probably going to work a lot better on TradeLocker when we get it coded correctly. So it's a balance, really. It's a balance. Well, we're still waiting for gold to do something, aren't we? In the meantime, we're long on US500, and it's just nudging its way through. And we're long on Bitcoin. No, I'm long on Bitcoin. I don't think anyone else trades Bitcoin. Bitcoin's going up again nicely, so that's nice. Let's just have a quick look at. We're waiting for this 15-minute bar again, getting towards 4 o'clock now. I can hear me. I can hear my voice going. I've been talking all day, and let's just have a look at where we are and the issues in front of us for having a successful trade here. So we've already gone through the story for buying this. We look at the unbalanced volume where it's going yes. We've not got any aggressive participants. Renko blocks are green and heading for the skies. The multi-time frame says absolutely yes. The thing we've got in the way is the BRN, big round number. So people trade to BRNs as well as Fibos. So there's a BRN to get in the way. What would I do here? I don't think I would do a stop to entry because we're out on camera breakout long when you get 11 pips up there. I'd probably be minded to reduce the risk probably under a fractal. So let's just zoom in and let's have a look at where we are with the 5-minute frackers. So the obvious thing to actually do is to move, there's opportunity to move stops under that particular fractal here. So we could reduce from our entry position. Just a reminder on the story. We had a reversal on camera breakout long. I did say we would get a push through on that next time. We've had that push through. The market's come back down, and C-ball has acted as a bit of a support here. Market's running sideways a little bit. Zoom back out. So we are in at this level. Fractal is around about 5 pips or 6 pips. So we could move the stop from 11, and I'm going to do that now, to 6. So we've got a progressive movement now, and we've moved the stop now to 6 pips. So we've roughly got 0.5%, just less than 0.5% risk on this now, with a 1.3% potential upside target. What I would do is I would put an alert on the BRN, because for the BRN, which is a 6-pip movement from where we are now, which is 0.5%. So we should not now, if the momentum is with us, we should not get a breakdown of this fractal. The breakdown of this fractal would mean the market price action closing above the 9 EMA. And, there is such a thing, the law of SOD. Market quite often, the market has been running really, really nicely since upwards of 2 o'clock for the past 2 hours above the 9 EMA, and it's running and it's running and it's running. We need to stay above the 9 EMA, and so the stop again. We do not want a double tap reversal, so we're moving our stop a nice 1 pip in the spread away from that fractal here, and then that's just going to trundle on. So that's where we are. I'm just looking at oil staying at the bottom, FTSE staying at the bottom. The Dow looks like it's stopped. The Nasdaq is not having a normal run as it does on a Friday. So the last thing we're looking at is gold. And I'm probably going to leave it there, I think, because what we want to see also to protect my voice, which is going. I mean, did a live session this morning plus mentoring session. So I've been in the trading live for a couple of hours this morning and talking for a few more hours on mentoring people in the trading group. And then we're now live again from 2 o'clock for a couple of hours. I've done nothing but talk. So for people who want to follow this trade, if you've got TradingView or CTrader, MT4, MT5 don't do it, but TradingView, CTrader, TradeLocker, switch on to Heikin Ashi candles, switch in 9 exponential moving average on, and if you haven't got a fractal indicator, then flip an egg. Then you should have one. Go on the website. The link will be below and on the video that I'm going to post later to get the fractal indicators. And you'll be armed, ready, and waiting. The trade that I would take here, that I'm going to put an alert for, is I'm looking for a candle, a 15-minute candle with a flat bottom, ideally, but so long as it closes above the 9 EMA, and I would have my stop under this swing low here. And what we're waiting for now is the market to, put in a reversal, and we'll be heading for back up to the 61.8% retrace level. Any questions? So we're in one trade at the moment. We're in US500, and we're looking to add 1.3% into the coffers, and then we're looking to trade gold, and we're probably looking for a 2% trade, at least one, if not 2% trade for the rest of the day. Right. So, okay, guys. Calling it for today. Have a great weekend and watch for the 15-minute bar on gold. Targeting 27.08 to 27.10. Right. All right, guys, I'm off, and this 15-minute bar might take 15 to 30 to 45 minutes to set up, but I would imagine we should be onto something at around about 5 o'clock-ish. I'll put the signal in the room. For my traders, I'll put the signal in the room so you can see the signal and make sure we get into gold. All right. Bye-bye, guys.